All right, a full of surprises policy, contrary to what we were expecting, a 50 basis point rate cut, coupled with a 100 basis point CRR cut, although stance has been changed to neutral from accommodative. You've seen CPI forecast also revised lower to 3.7%. To understand, what the governor's tone indicated, it does seem to be a very, pro-growth kind of approach that the RBI has taken. To understand the future trajectory, I'm joined by Rajni Sinha, Chief Economist at CareEdge Ratings. Rajni, lovely to have you here, full of surprises. Stick to the script kind of a policy. 50 basis point on the repo front plus CRR cut of 100 basis points. Your initial thoughts?
Yes, absolutely. Like you said, the policy support, the extent of policy support has come as a surprise. We were expecting around 25 basis point rate cut, though overall for the year we had factored in 50 basis point rate cut, but we were expecting that probably the central bank would wait for a couple of more months, see the scenario, and then go with another 25 basis point rate cut. But I think what has given comfort to the central bank is on inflation front. The last inflation point coming at 3.2%, and in fact, in the last 3 months, consecutive months, it has been below 4%. Moreover, aspects like expectation of above normal monsoon this year, given that global commodity prices are expected to remain benign, specifically global crude oil prices, I think all that has given the confidence to the central
Hmm.
bank to go ahead and cut the rate, front load the rate cuts and cut by 50 basis point at one go. And also the important thing to note is that the governor highlighted the important aspect that the global situation still remains quite uncertain. So if you see, compared to the
Hmm.
concerns that we had around April, May, regarding reciprocal tariff and overall global trade policy uncertainty, that has kind of, mellowed down in the last few weeks. Nevertheless, there is still a lot of uncertainties, and hence the RBI governor has highlighted that given the global uncertainties, they would continue to remain cautious and focus on supporting growth.
Point taken. We'll talk about the future trajectory as well, but let me also get on board our next guest, another gentleman who's joining in, Sunil Subramaniam, market expert. Sunil, was this the push that markets were waiting for? Because we have fired up and how, especially on the Nifty Bank Index. We made a fresh high. It's almost a 700 point move, a 1.5% move on the Nifty Bank Index. We made a fresh 52-week high of 56,457. We were consolidating, and now look at the way the markets have also taken off, given the double bonanza that we have got in terms of CRR cut and a 50 basis point rate cut. Are we ready to, make a dash at, the previous highs on the Nifty as well? Because after being ranged, this is when we get out of this range of 24,500 to 25,100.
Well, yes. First of all, you said as a market expecting, absolutely, market was not expecting, and I think that's the biggest thing that market always reacts to surprises, negative or positive, and this has been probably the most huge positive surprise that you could have expected. The second, I think that while I share the thoughts of the previous speaker in terms of the economics of the decision, what I liked was the clarity of thought that along with the rate cut, he's brought in the change in stance. Why I'll tell you this is very important? Because if the stance had continued to be accommodative, it indicates a worry that he's doing everything he can, but there's still worry. But by changing the stance, he has been very clear that he's front loading, he's taking a risk. There's a leap of faith by the RBI governor because not only this, the 100 basis point CRR cut. So clearly he's focused on what? So if you see, go back to this, the fiscal policy and monetary policy are today in coordination. They gave 100,000 crores of giveaway to the middle class, and now he's making sure that the banks pass on the rate cut through the CRR cut. 2.5 lakh crores of money released for the banks, right? Now, if they
Yeah.
don't pass it on, it go to their profits. But I think that fiscal and this going hand in hand is that he's taking the leap of faith. And I think that this will be the thing which will take the economy out from where it's stuck at the 6.5 level, and in an uncertain time help us push towards 7. While the RBI has not revised the growth projection yet, it's still at 6.5, but this will cascade into a much higher growth rates once we have a BTA and everything signed. So I think that I would compliment the RBI governor. It's a 10 on 10 policy that you take a risk, right? And in a positive way before anybody expects it, because that will now create a multiplier effect in the economy. Hats off to the RBI governor. I think I've been a bull on banking for quite some time on your show, you're aware, right? And I think this is the payback moment for all the earlier thought processes.
All right, a 10 on 10 policy. Of course, a lot of money gets mobilized and gets lent out, right? So that will help out banks as well. I will talk about sectors, etc. But let me come back to Rajni. Rajni, does this change of stance mean that we have already seen the end of the rate cut cycle, or would you say that going forward in the rest of the financial year, one more rate cut could come by, given the situation and how it unfolds? Your thoughts, whether we are looking at 5.5 as a terminal rate, or it could be a little lower from here?
The way I look at it is that the change of stance basically means that going forward, the decision will actually be data dependent. And the most crucial data to watch here would be what happens on the growth front. Because specifically on the global front, there are too many uncertainties, and it's very difficult to say how it's going to play out in the next few months. Given the progress that has happened on the reciprocal tariff front in terms of China, US also the trade talks progressing relatively towards positive side. Given that US has postponed the reciprocal tariff for 3 months, things seems to be on a little better footing, but you never know. So I think that's why it's very important to be cautious, because if things deteriorate on the global front, India would get adversely impacted, though India's trade exposure as such is much lower than many of its Asian peers. Hence, the impact of the global developments would be relatively less. Nevertheless, we are all too interconnected now. So India would also feel any severe global crunch. India would also feel the impact. Hence, it's wiser to be cautious. And in case growth falters, RBI is expecting GDP growth of around 6.5% for FY26. Our estimate is little lower at around 6.2, 6.3%. But if growth falters and gets worse than the 6.2, 6.5% range, we could see another rate cut happening during the year. So that would really depend on, how the growth indicators pan out going forward. But for the time being, from the indication that the central bank has given by changing the stance, it means that we should not expect any more rate cuts this year unless the growth turns out to be much worse than what is being anticipated currently.
Okay, that's the view. Of course, it will be data driven, and how growth pans out, that would be the main decider as to whether or not we'll see more rate cuts going forward. But Sunil, with increased lending and so much money mobilized for lending, what happens to bank margins? That's my first question. And secondly, we've seen earnings trickle in from banks, and there were one-offs, of course, in terms of higher MFI exposure. Banks got impacted, but otherwise bank performance has been fairly good in the fourth quarter. So how would you play the rate cutting cycle, via the private banks or the public sector banks?
So my preference would still be the private banks, and for the reason being that you talked about the net interest margin pressures, right? Now, obviously, banks would go all out in a competing scenario to reduce rates on lending products to boost the volumes, right? So you would then say, oh, then margins will get affected. But there are two things here, right? There's 2.6 lakh crore of CRR cut, which is going to aid the profitability of banks. So your NIM margin pressure, whatever you face on the new loans, would get compensated by 2.5 lakh crore of additional profits, because you're not placing that much money at 0% with the Reserve Bank, right? That's number one. Second aspect is that if you look at it, the incremental loans to existing loan book share is very, very small. So in the existing loan book, private banks have got auto loans and personal loans, which are fixed rate loans. So there's no impact on the existing lending book on the, in terms of the interest rates. It's only the fresh loans getting added, which will be at lower rates, and they don't need to reduce the deposit rates so much. But if you looked at it, already the banks have cut deposit rates in the previous quarter itself, and that's why if you see their deposits were actually surplus. So you see the end of March numbers, bank deposit growth rate was far higher than the lending growth rate, and banks were placing their surplus with mutual funds in liquid schemes and overnight schemes. So banks are flush with money. The governor also mentioned about not only the banks being flush with money because 9.5 lakh crores of liquidity is already provided, but he also mentioned about the quality of the banks. He said the banks are in very good position. So to that extent, right, the NIM pressure on new loans is going to be there, will be compensated by the CRR cut and the fact that existing loan rates may not come down so fast. So I think overall the volume growth will more than make up in a EPS number because it's priced into quantity. So I don't think that you will expect to see EPSs continue to grow. Though new loans, there could be margins being less, but I think that's worth it because ultimately, if you want to kickstart the economy, and that's where, the way the RBI governor's approach, if I may make one more point, is that he is talking about strengthening what India is strong at, which is domestic demand. So he's, instead of looking at it as a defense against the international tariff scenario, he's saying, let's go and play our domestic the strongest we can. So if domestic demand is going to grow even stronger, that's the best counter tariff related uncertainty on the export side. So I think that the doors are very clear for a massive rate cut on lending products at the personal loans, auto loans, real estate loans side. And hopefully with the 1 crore of giveaway in the budget for the middle class, we should see a strong revival of urban demand. And since that's the case, it's the private sector banks which will lead that because they'll be very fast to act, turnaround will be very fast, and public sector banks will gain over a period of time when industrial lending picks up. But the initial phase of it, private sector banks are going to walk away with the bulk of the new loan sourcing that's going to happen.
But what about NBFCs? NBFC sector will also directly benefit, right, because of lower, cost of funds and, potentially improved credit demand. So within the NBFC space, Sunil, would you look at the larger names?
Yeah, absolutely. Why I'm saying this is they need to have bargaining power because the CRR cut is only for the banks. So how much NBFCs borrow from the private sector, they borrow from market, but they also borrow from banks. So to the extent that what extent banks pass on this lending to NBFCs versus directly lending to themselves, there's an issue. So I would weigh on the larger NBFCs because they have bargaining power. And so the larger NBFCs will be the better ones to bet in because ultimately they are dependent on bank lending as a part of their liability book to lend to that. But otherwise in turnaround time and the reach, the last mile reach, clearly the bigger NBFCs are way ahead of even the banks. So yes, I would place my bets on the larger NBFCs who are in the retail space.
Sure. Rajni, in terms of the CPI forecast, it's been reduced by 30 basis points to 3.7%. Were you working with a similar downward revision to inflation forecast, or were you expecting the governor to reduce it by, say, 50 basis points to 3.5%? Would that have been overly optimistic? And what are your own estimates when it comes to inflation for FY26?
So, see, on the inflation front, we were expecting around 4% or so. So, while if you see the situation has improved in the last few months, like I mentioned earlier, the CPI inflation in the last 3 consecutive months have come less than 4%. And the critical aspect is that food inflation has started moderating quite significantly. And that has probably given the comfort to the central bank to reduce the inflation forecast. And on top of that, the other important thing is that even the global commodity prices are likely to remain benign this year, given what's happening on the global growth scenario. If the global growth is expected to moderate and the demand is expected to moderate, we do not expect much pressure on the global commodity prices. And crude oil prices easing and overall commodity basket prices easing is a big comforting factor for India too. But why we had kept a little higher buffer of around 4% inflation is simply because it's very difficult to project on food price inflation. Right now, the projection is of above normal
Hmm.
monsoon, and hence the expectation that this moderation in
Hmm.
food prices that we have seen is likely to continue. But let's keep in mind, it's not just overall monsoon, but it's also the spatial distribution of the rainfall, the temporal distribution of rainfall, and
Hmm.
also increasingly what we are seeing in the last few years is any other kind of climate related disturbance which has been growing in the last few years. It could be unseasonal rainfall, it could be heat waves. We have seen this year monsoon starting before than was earlier expected. So these are some of the other aspects related to climate, because of which we need to be wary as to how food inflation will move going forward. But yes, this I'm just talking about being cautious, but
Hmm.
otherwise, the situation as it is right now, yes, there are no concerns on inflation front. It is likely to remain comfortable.
Hmm.
And I spoke about supply side factors. Even if you look at demand side factors, which is reflected in core inflation, though
Hmm.
core inflation has inched up a little in the last few months, but it's still close to 4%. We don't see it rising because we don't see the growth momentum being so strong as to put a lot of upward pressure on demand side inflation. So, in a nutshell, yes, there is not too much concern on
Hmm.
inflation front.
Okay, yeah, no, not too much concerned on inflation front, but let's also talk about the bond market, so to say. I think the yields are fairly quiet. I mean, there's not been a big move in the bond market, but when it comes to the yields, Indian yields, we've seen a 75 basis point correction in yields in the last odd months or so. Do you now, with this 50 basis point rate cut coming in, do you expect yields to come down to 6%, sub 6% even, or would you expect it to remain at where it is right now?
So, market
Rajni.
had actually kind of, already factored in rate cuts, and 25 basis point was expected in this policy. And market was also factoring in another 25 basis point later during the year. They were not expecting 50 basis point at one go, but yes, the expectation was of another 50 basis point during the year. So yields had already reacted to that, and we had seen yields going down, like you mentioned, in the last month or so. Now, important point to note is that the RBI has changed its stance to neutral, which implies that going forward, most probably there's not going to be any further rate cut. Yes, like I mentioned, unless the growth comes
Hmm.
out much lower than expectations and we see the growth faltering, then there could be a further rate cut. But otherwise, we should not expect another rate cut. So I guess that's why there's not much movement in yields post the policy. I do not expect the
Hmm.
yields to go below 6%, but yes, we can see a little lower than these levels
Hmm.
during the year. So I would say around 6 to 6.2% during the year is what we are expecting.
Okay, 6.2%. That's the expectation. But coming to you, Sunil, what changes when it comes to the FPI flows? Because the rate differential, the yield rate differential, has significantly narrowed, and of course, U.S. yields are going up for higher U.S. debt. That's another trigger for U.S. bond yields going up. But for us, it's narrowed quite significantly. But given the fact the kind of measures RBI has taken, to boost lending, to boost growth, etc., do you think that would, compel the FIIs to in fact take a relook at their portfolios and perhaps not pay so much attention to the narrowing gap, because nobody would want to miss on the India story, right? Because that's still the fastest growing emerging economy.
No, actually speaking, this narrowing gap, first of all, let me state that this is a big positive for FIs to come in. Okay. Now, let me address the last point that you raised first
Hmm.
before I speak about that. The narrowing gap is actually positive for FIs to come in. And let me explain why. Because the currency movement of two
Hmm.
countries is a function of the difference in the interest rates. Now, this narrowing gap means in the future, the depreciation pressure on the rupee will be much less, because now the fundamental reason for depreciation is the difference in interest rates, which is only 1.75 today. And as the previous speaker was saying, if there's even a 25 basis points cut in India's long term yield, that differential comes down to 1.5, which means the rupee depreciation will be only the long term average rupee depreciation is 3%, against which it's only 1.5. So an FII investing today in a scenario where he had already baked in a 3% in the normal course rupee depreciation, already has seen it come to 175. If it goes further down to 150, his any loss on account of rupee depreciation becomes that much less. So there's actually a fresh impetus to put more money into India now, because relative to other emerging economies, Indian economy's depreciation is going to be less. That's the point. So for me, the interest rate differential narrowing is a positive for FIs to come in. So that's one. Second, the reason why this will be a big positive for FIs, because 35% of the large cap index or the MSCI index is banks. And as I said, a 2.5 lakh crore savings to banks, because they're saving on 0% CRR, is a huge positive for banks. And if you have the lending also picking up, right, even passive funds allocation to India should step up because of the sheer weightage. So there would be a big flow into India passives from abroad. So to me, that banking sector is a big, big bellwether for an FI to take a call in India, other than IT, of course. So that's again another positive. The third is that this is giving the Indian economy domestic resilience, because this rate cut, as the RBI governor mentioned, he's supporting this 1D, the domestic demand. And if that picks up, that's the best support you can have against tariff uncertainties. So I think that their whole look about the Indian economy, and for them, India is a stock. They will reprice this stock very quickly. And I think this, along with any positive news on the BTA coming forward, right, will be a huge positive, and it should open the doors for a lot of even short-term FIIs now look positively at India. So I expect that that will come in and itself help the currency, because the flows itself will come and give a support to the Indian currency. So overall, I think this is a big, big positive for FII flows, which I hopefully over the next few weeks you should see a huge inflows coming in.
Okay, expect huge inflows over the next few months. But talking about the bond market as well, Rajani, the outflows from the bond market by FPIs, from government securities, were the highest so far in the quarter since the inclusion of Indian bonds. But do you expect some rebalancing there and inflows to come back into the bond market here on?
So yes, you are right. We have seen outflows from the bond market, and that has also got to do with what is happening to the US yields, which have been rising very sharply. Now, what to expect going forward? Yes, we could see some inflows coming back into the debt market. But as far as the bond inclusion is concerned and inflows because of that, we do not expect very significant inflows this year. We did see a lot of inflows coming into the debt market last year because of the bond inclusion. However, this year, because of that, the expectation is not of any huge amount. But nevertheless, overall, we could see inflows improving to some extent. Overall, I think for as far as FII inflows are concerned, we need to be cautious on that front. It could be volatile going forward. The important aspect to note here is that even though I'm saying it will be volatile, eventually market may look at the fact that overall in the global scenario, India would be one of the fastest growing economies in 2025. Even if we go with the IMF's projection, which is lower at 6.2% as against RBI's projection of 6.5%, we are still talking about a large economy recording a good growth. So in that sense, they could be some comfort for FII inflows. And here I'm talking about equity too. And we could see some improvement in FII inflows going forward.
Okay, we could see some improvement in FII flows going forward in the bond market as well. But what happened to call rates from here on, Rajni? When we had the repo rate at 6%, the call rates stood at 5.75 or something like that. But now with repo at 5.5%, what happens to call rates here on? How much more lower can they go from here?
So, if you see in the last 2 months, in fact, the call rate had been hovering around 25 basis point lower than the repo rate. So, there was already effective easing by 25 basis point that had happened even before the repo rate cut. So, and now RBI has announced a 50 basis point rate cut, and they have injected huge amount of liquidity with the 100 basis point cut in CRR, which implies that liquidity is going to remain surplus. It's going to remain abundant in the market, which implies that money market rate will remain quite soft, and we could see call rate hovering below the policy rate going forward also, which is what the central bank actually has been attempting to do. The idea is to ensure that there is good transmission of policy rate cut, and to
Right,
ensure that the money market rates also kind of
right.
factor in the policy rate cut and surplus liquidity that is there in the market. So we could expect the money market rate to remain
Sure.
softer than the repo rate going forward.
Okay, that's the view then. With that, Rajni, would like to thank you for taking our time and joining in and sharing your thoughts with us. Always a pleasure, and look forward to interacting again sometime soon. Well, with that, let's also get on board Lata Venkatesh of CNBC TV 18 and understand her thoughts on the policy. Okay, she will be joining us in just a bit, but let's take a look at the market. That's kind of taken off after a 50 basis point rate cut by the RBI, a surprise 50 basis point rate cut coupled with a 100 basis point CRR cut, although the stance has been changed to neutral from accommodative, but that is something that is in fact being seen as a positive, given the fact that it shows that the RBI governor has taken a leap of faith when it comes to front loading interest rates to revive growth. Of course, we will be getting in more
Yes.
market experts to understand how to play some of these rate sensitive stocks and
Are they
even
done
the
with me?
agricultural stocks, given the fact that monsoons are also monsoons are also expected to be above normal. But I also have in the studios with us, Bodhisattva Ganguly, who is the group consulting editor at Network 18. Bodhi, lovely chatting with you on a Friday morning. It's a full of surprises Friday morning for us, given the fact that we were expecting the RBI to stick to its script and cut rates by 25 basis points, but that hasn't happened. We've got a very positive and pleasant surprise, 50 basis point rate cut, and it was a fairly pro-growth policy, so to say. Your initial thoughts as to none of us were really expecting such a bonanza move, right?
Yeah, except SBI, which got it right. The SBI's chief economist was predicting 50 basis points, so they got that right. And yeah, so it's 50 basis points, 100 basis point cuts in CR, obviously in four
Staggered,
staggered over 4 quarters. So it's so the real bigger takeaway is obviously the RBI. It's trying to boost growth, because if you look at, for example, the governor's statement, right at the end he says that while price stability is necessary, it's not a sufficient condition, and you need to put in place other measures to boost growth. So I think that's really the big. They're trying to boost growth in a big way. The other big takeaway is obviously the policy. They've changed the stance to neutral. So if you see the press release of the MPC, so and the going forward, monetary policy can only give limited support to growth. So neutral in this context means, I guess, that for the next two MPCs, which are in August and then October, interest rates will probably be held at the current level of 5.5% post the 50 BPs cut. We'll have to see what happens in December. The RBI has not raised its growth forecast, interestingly enough. They have not, so they're not. So while the interest rate cut is very clearly, the signaling is that they want to boost economic growth. They have not. I don't think they're factoring that in their own forecast as yet. It's the same as the earlier forecast. $1 million question is, or the $1 billion question is whether it will actually boost growth. Now there it's whether corporate credit right now, corporate credit to to the corporate, is at is actually has been declining, if I'm not mistaken. I mean, the growth rate has been declining, and also increasingly Indian companies are not going to banks to finance capex expenditure. They're using other means. They're using obviously internally generated from their own profits, ECBs, QIPs. So there is a they're doing that. But yes,
Modi, I'll just come to you in a bit. We also have Lata Venkatesh joining in from the RBI headquarters. Lata ma'am, contrary to what we were discussing yesterday, the RBI has sprung positive surprises in terms of higher repo rate cut and of course a CRR rate cut as well. Your thoughts?
The rate cut, although it is 50, is coming kind of with a countervailing force also. They've changed their stance from accommodative neutral, indicating that the next rate cut is not a given. So what the governor has done is he has advanced the August rate cut to June, but if you go to neutral, you are possibly also giving a hint of an extended pause. That can't be ruled out. So at the moment, people are not willing to bet that the terminal repo rate is going to be 5/4 or 5. So all that has happened is everyone was expecting the repo rate to go to 5.5 by August. It's come in June. But is the terminal rate going to be 5/4? Is there a cut in October? People are less sure of that. So to that extent, the dovishness is kind of countered with an element of, caution as well as to how many cuts they are going to give. They've only said they have advanced, which looks like an extended pause ahead. The real dovish factor is the CRR cut, and that is coming actually a little back-ended. So it's leaving the market a little confused. We have to, wait and see what they say in the press conference. Until today, although the repo rate was 6%, the effective rate, the call rate, the rate at which banks exchange money for a single day was actually 5.75 because there was a lot of liquidity in the system. It went even below 5.75. Now, since they are giving a double cut, the repo rate has become 5.5. Will they keep the call rate at 5/4? Will it go even? Will they continue to keep the same amount of liquidity, or will they take it out with reverse repos, or are they making space for a lot of short dollar positions that will mature? The bond market is way more confused than the equity market. For the equity market, there are definite positives. Immediately, the bank margins are crushed because you were preparing for quarter and you're getting a 0.5% cut. So lending rates are going to fall very sharply. Deposit rates will fall more slowly. And therefore, definitely there is a crunch now. But if you're going to look at the bank margins at the end of FY26, they will actually be better than what any analyst thought, because they have another 2.5 lakh crore to lend, which was ideally locked up as CRR, is now going to fetch them a 6-7%. That adds to margins. So the exit margin is going to be better, but the current margins are definitely going to take a hit. So Q1 numbers have to be brought down. But FY26 full year, I'm not sure the margins are going to come down. They may even be made to go up a bit. So it's positive banks, which explains why Bank Nifty is the best performing index at this point in time, above over 1%. And of course, the other beneficiaries in the stock market are clearly autos, real estate and NBFCs, the people who borrow money. For them, the cost of funds is going to be 0.5 percentage point less.
We had a panelist, Sunil Subramaniam, and he gave the RBI governor 10 on 10 for this policy. How would you rate it?
Well, you're asking me? I would rate it, pretty high,
yes,
but not 10 on 10. No, I wouldn't go as far as 10 on 10.
And of course, one more thing.
Because, I would think he could wait a bit. I thought he could have waited.
Voice is feeble.
Okay. Okay, and one more thing. What would you be asking the RBI governor in the press conference?
Well, precisely this liquidity part. Because you have come to 5.5, are you going to keep the call rate at 5/4? Or are you now going to start reverse repos? How is the liquidity going to function? Because that is going to really determine how much bank margins will go down, how much NBFCs will benefit. If the call rate comes to 5/4, then the cost of borrowing for NBA from the market, Bodhi was just telling you that everybody is borrowing from the market now, the market rates will fall for everyone. So it is very important what he is going to tell us about liquidity as well. That would be my question to him. Are you going to keep the call rate at the repo rate or 25 basis below the repo rate?
All right, ma'am. I won't keep you any further, ma'am. Thanks a lot for joining in and sharing your thoughts with us. We'll touch base again sometime soon. Thank you.
Thank you.
Well, Abodhi, 2.5 lakh crore, mobilized in the system for lending. But, do you see the corporate appetite for borrowing increasing here on? Because there is a lot of uncertainty in terms of tariffs as well. Will that spruce up corporate lending and in fact flow into private capex as well? How do you see the dynamics playing out here on?
So the honest answer is that's the intention of the policy, right? That's why he's cut interest rates. That's why he's infusing liquidity. He's been infusing liquidity even before this. I mean, there's a, So now, how much will this? But as you also said, there are a number of things here. One is that, of course, there is a huge amount of uncertainty caused by tariffs. So tariffs is actually the latest one. And yes, there is and because of tariffs and because you don't know where the tariffs are going to settle at, right? I mean, the US and where the US markets are going to settle at, where the US bond markets are going to settle at, because, the reciprocal tariffs were first imposed, then they were withdrawn. Now there is yesterday was a dramatic night for many other reasons.
I want to throw a question on that to you, but towards the end of our discussion.
We can do that also. Yeah, that's fun. And I wouldn't actually, if Trump is aware of what the RBI is doing, he might ask Chair Powell to follow the RBI's example and cut interest rates. Right?
He's already been vehemently asking him to cut rates.
That's right. So that might be another. He might, if he's aware of what RBI is, the RBI has cut interest rates by more than expected. Anyway, but just coming back to your question. So there is the big uncertainty is the global macro uncertainty. And I think the macro uncertainty, given the trajectory of the current US administration, is like a way of life. It is something which you'll have to deal with, right? I mean, there was the Trump-Xi call, which could indicate that there could be some. See, the US and China will strike some kind of a trade deal in some weeks from now. Whether the trade deal will last, nobody knows. For example, Trump had suddenly raised the tariffs on steel and aluminum from 25 to 50, which has some minor impact. We are not big exporters of steel and aluminum to the US, but there will be some impact on the margin. So these kind of uncertainties will continue to prevail. The other thing is on the private capex, really two issues. Private capex will pick up when capacity utilization picks up in a big way. I don't know whether there's any numbers I couldn't spot it in either the governor's statement or in the monetary policy, the governor's speech and in the MPC press release on capacity utilization. But once capacity utilization crosses 80-85% mark, you could expect a significant pickup on private capex. We are not seeing that yet, and that is very clearly, that is spelled out by the governor, that is also spelled out by the MPC. And I think if you were to take away the spirit, what they are saying is that, look, we are doing the best we can. Our duty is not just to is to keep inflation below 4%. It is below 4% now, but also to support growth. So here's a big rate cut. And the rest is now it's up to the private sector as to where they wish to invest. It's quite simple. We don't know. And of course, there is but that's a secondary issue. Again, we can look at data, but I think, or we can pull up some data. But I think, lending to corporate as a percentage of bank lending is actually coming down. It may be rising in absolute terms, but it's coming down in percentage terms. Bank corporates are increasingly funding themselves from other sources, which is fine. That's not the point. But very clearly, it's a policy intended to support growth. So that, let's say, the central government can have no complaint from when it comes to RBI, that RBI is not doing enough. I mean, if you look at the actions of the governor, it is also in broader terms to make it easier to do business. He's, for example, he also he's been, he's modified to some extent the way essentially the provisioning norms, for all kinds of loans to the unsecured lending and so on and so forth. So he has been generally taking measures. So it is to boost growth, but whether growth will be significantly boosted from the current range of 6.2 to 6.5 to closer to 7%, because again the MPC press release refers to the aspiration for higher growth, right? It uses the term aspiration. I think not just the MPC, all of us would aspire to 7% and indeed more. But I think that is going to be still going to be a bit of a hard slog. It's not going to happen immediately. Yeah.
Sure. Let me also bring on board Dinesh Unnikrishnan from Moneycontrol Pro joining in. Dinesh, lovely chatting with you. Your thoughts on what's transpired today. 50 basis point rate cut. Of course, we supported it by staggered CRR cuts. Do you think we are at the end of the rate cut cycle? You've been covering banking space for such a long time. How have you looked upon the change of stance and the other measures announced by the RBI governor?
Well, Nandita, thank you for having me on the show. The RBI has had a very narrow golden window, so to say, to act and front load the rate cuts because the inflation is clearly no longer the predominant concern of the central bank, and the projection for FY26 also testifies that. At the same time, we have a serious growth problem, although we are not in a crisis mode. If you look at the April and May service and manufacturing PMIs, growth is clearly slowing down. So the MPC had to act, and they have acted in full swing, both on repo rates, which is now cumulative 100 BPS rate cut in since February, and more importantly, CRR, which will release almost 2.5 lakh crore liquidity into the system. But at the same time, the big takeaway for me today is that the change in stance, which is now back to neutral, which means that the very serious possibility of a prolonged pause ahead, and the RBI is now sort of preempting a unexpected spike in food prices, particularly because we are still at the start of the monsoon. And about 46% of the CPI basket is now food prices, and it can swing both ways. So the RBI is now preparing, giving itself room to act on the inflation front. But what is important beyond today's announcement, Nandita, is that the banking system is going to respond, because unless banks show willingness to translate these rate cuts and the CRR cut to lower rates on non-repo linked loans, the repo linked loans will automatically the rate will be lowered. But we have a certain sizable quantum of non-repo linked rate loans as well in the system. So whether banks will be willing to lower those rates, and but it's very difficult for them, because then they will have to sacrifice on the margins. Because the deposit rates cannot go down any further, because already there is a crisis of lagging deposit rates. So how the banking system is going to respond to today's rate actions is also equally important to see. Yeah.
Okay, one more question, Dinesh. Durable liquidity may see some bit of pressure, seasonal bump, so to say, with a pickup in economic activity following the start of the sowing season from July onwards, right? To maintain the system liquidity, do you think the RBI can take recourse to longer tenure VRR auctions? Would there be a need at all? I mean, just explain this to us.
Well, Nandita, I couldn't hear the latter half of your question, but I understand you're asking about the liquidity part. See, if you look at ever since Governor Malhotra took over from Governor Shaktikanta Das, the RBI's liquidity policy has been so liberal, and almost 9.5 lakh crores of funds have been infused in through multiple OMOs and other instruments. So the question now is that how will the banking system be able to, particularly the NBFC industry, NBFC space, how will this extra liquidity will translate into the system operations of institutions like NBFCs and banks? Like I mentioned earlier, RBI can keep pushing in liquidity, but unless how the deployment, there is also a carry cost for that money for the banks, banking system and NBFCs as well. Unless they are able to profitably deploy that money, then again this is going to cause some issues for the banking industry. So there is no dearth of liquidity. Already we are in a surplus, and RBI has been committing adequate liquidity in all their announcement, particularly, if you look at the first 6 months of this year. So today's liquidity operations, I see this as a continuation of that policy, and how this is going to pan out, it's slightly tricky and premature at this point to predict. We'll have to watch.
Sure, we'll have to watch, but I think we still have Sunil with us. Sunil, I just want to talk to you about the real estate space. Home loan rates will fall, quite rapidly, so to say. But here on, do you expect affordable housing to, get a significant boost? Because luxury realty, as it is, has been doing well.
I think so, and I'll tell you why. Because of all the what RBI governor has done clearly, has told the banks in no uncertain terms that I want you to pass it on. That's the purpose of the CRR cut, the front loading of the rate cut. So I think that if banks, who are the primary lenders to the affordable housing segment, apart from housing loan companies, of course, is that the leverage impact of a small reduction in EMI on the size of house you can buy. And if you consider the 100,000 crores of middle class giveaway, I think it will go a long way in terms of boosting this affordable housing segment, right? Because they are very rate sensitive there. Because the rich people, right, who you mentioned about luxury homes, for them the rates are a tax efficiency, for that they borrow. Otherwise, it's bulk of this is their own money. But at the middle class segment, right, this, as the cities are becoming more unaffordable and people are forced to go outside to the outskirts to buy even a 2-bedroom flat, a small difference in the rates can make a huge difference in terms of their affordability. So I think ultimately that's the big takeaway that one should expect from this. Whether it translates, we'll wait and see. But I think the RBI governor has clearly done everything that he can. And I would expect that the affordable housing segment and one more segment, the entry-level car and two-wheeler motorcycle segment. These are the two places where the EMI reduction will make a huge impact on an aspirational purchase. So lots of people who weren't thinking of buying a house, weren't thinking of buying a two-wheeler, now would probably come into the bracket of wanting to do that. So I do think that, of course, now the ball rests in the banks and the housing finance companies court on how far they go and actually drop the EMIs, drop the lending rates. So I think if they do act as per the RBI governor's expectation, there should be a significant boost to affordable housing and to entry-level automobiles.
All right, that's the view then. But with that, would like to thank you, Dinesh and Sunil, for taking out time and joining in and sharing your thoughts. I look forward to more conversations going forward. Thank you for joining in this afternoon. I just want to quickly take a check of what the market is doing right now. It's a 220-point bump up on the index, although we are still under that 25,000 level. We are still sub 25,000 level, but seems like now we could be breaking out of that range that we had seen in the market over the last couple of weeks, 25,000 and above. That's what the expectation is. We'll also be touching base with a technical expert to figure out how the chart patterns have changed. But Bodhi, I want to come to you. How are you, or what are you making of the rare earth magnet curbs that have been put in place by China? Of course, Sunil mentioned that this cut in repo rate bodes well for entry-level motorcycles and all those auto companies, but the EV ecosystem is staring at supply chain issues, right? So in that, how do you expect these supply chain issues to impact growth going forward globally and even India-wise?
Yeah. So again, I mean, the point is that so this is outside of the purview of monetary policy.
Yeah.
So I think it will depend on how the US-China negotiations pan out, because that's the So if that ends in some kind of a compromise, the rare earth supply will ease up. Of course, India has got its own dynamics with China. My understanding is that while supplies have been curtailed, the situation is still manageable, right? But it's a somewhat fragile situation, especially for the EV industry, not so much for the ICE, for the conventional two-wheelers and the conventional cars. But yes, it is a But yeah, so the point is, therefore, again, to bring it, to link it with monetary policy, there's no guarantee that these big interest rate cuts or CRR cut is going to boost growth significantly, because there are other issues. I mean, supply chain issues could be an issue, and I think it depends on, the whole thing is that there is an Indo-US trade deal which will also come. Of course, that doesn't cover rare earth. Rare earth is more China. Also another significant possible policy response to rare earth is that, again, I've just picked up, I think there were media reports that India could in fact launch a PLI to incentivize rare earth manufacturing. I think it was a CNBC TV18 exclusive, if I'm not mistaken. But it is certainly, so we're living in an uncertain time. So I think the RBI has therefore saw it fit to cut rates to really boost economic growth, given the overall uncertainty and given that inflation is still well under control.
Sure. Since let's talk about banks as well. Like Lata ma'am said that near-term margins will be crushed, and deposit rates will fall, gradually, not in a hurried way, right? So, in your experience, if there is a situation like this, how have you seen banks perform thereafter? Stock performance wise.
Yeah, so I think Lata explained it beautifully. That I think the point she's making is that overall the resources, while the near term margins will be crushed, but the Nifty is up because the overall lendable resources will go up by a huge amount. And as you also said, now how they use it is one issue. The other issue I just wanted, and again we can just do a little bit of digging to find, but see, there are only certain quantum of loans, and we can look into the numbers which are linked to the repo rate, home loans in particular, but these are recent vintage home loans, right? There are lots of home loans which are not linked to the repo rate, if I'm getting it right. I mean, especially the older home loans. So there's no guarantee that banks will bring the rates down. I mean, there'll be a general pressure to bring it down, because you can always, reprice home loans or refinance home loans. And then obviously unsecured loans, consumer loans, are not linked to the repo rate. I mean, that depends on the riskiness of the consumer. So they're not really linked to that. So yes, there'll be a general pressure on interest rates in a downward direction, but there's no mechanical link with the repo rate. For example, again, I don't think auto and two-wheeler loans are not linked to repo rate. Certainly, consumer lending is not linked to the repo rate. Of course, the repo rate doesn't. It is the key interest rate, so it'll affect interest rates in a downward direction. Therefore, real estate and stocks are going up, and automobile stocks are going up because interest rates will come down. It will boost consumption, but to what extent remains to be seen. Obviously, also the other. But this is nothing new. But the other determinant of consumption is obviously job creation and capex and so on and so forth, which the monetary policy is trying to help. But to what extent, we'll see.
Okay. Modi, with that, I would like to thank you for taking our time and joining in the studios this morning. I will have a offhand chat with you about the policy as well. But we have another guest waiting by. Sanjay Agarwal, Senior Director at Head BFSI at Care Edge Ratings. Sanjay, lovely to have you on the show. First of all, your initial thoughts on what the RBI has done and the future rate trajectory before I get into the specifics.
Yes, so this is a very good move to reduce the policy rates by 50 basis points, and the added bonus on the CRR cut. Liquidity in the injection of 100 basis points, the good move. So overall, a good policy for the sector. I think it's a great thing.
Right, Sanjay, going the CRR cut that mobilizes 2.5 lakh crore and increases lending as well, right? But it would lead to significant margin pressure for banks, at least in the near term. So how do you think banks will navigate that?
The advances have seen some bit of a decline in the growth. The deposit rates have not been coming down. They have been sticky. And that is what the banks are fighting out. The concern with the advances is that the larger borrowers, they now have a very strong access to the bond market. And bond market prices have tumbled very strongly in the last 2 to 3 weeks, especially the differences between the AAA rates and the GSEC rate that has tumbled a bit. So this will give an edge to the banks to be able to, let's say, reduce the loss of loss of business that they probably would have had.
Okay, that's the view. But how do you really look at the banking space now? Because would you look at the banking space at least into the near term through NBFCs because their cost of borrowing goes down? So would it be more positive for NBFCs in the near term?
So the larger NBFCs had a benefit of the reduction in the spread, which I told you just now. I mean, in let's say 4 weeks, about 50 to 75 basis point reduction had happened, and the best of the NBFCs are now borrowing at somewhere around 7.5%. Yeah. So that is where the whole spreads are 6.5%. Sorry, and that is where the spreads are, and that has been pretty challenging for the banking sector to get the rates to that level. This will help them ease the liquidity and hence reduce the interest rates and the pressure on deposit that they were having since the CD ratio, as the governor had said, is at 81%, so that's pretty high. So this will help them in garnering the resources or whatever the diversion of resources were there, they'll be able to use it for the business, and it will help them reduce the rates for the borrowers. And as far as the larger NBFCs are concerned, they have a strong access to the bond market. The rates have been very benign, so they would continue to flock to the bond markets, and to a certain extent, even the securitization, etc. markets would probably a bit of that would move to the bond market, since the overall gearing in the system, both the banking and the NBFC system, is very low, and the capital adequacies are very high. So there's no issues of capital at the system at any level, and hence this brings quite a bit of equilibrium in the system.
Another question really on how to really, what are the how to really play this rate cut cycle in terms of the banking universe. Would you, tilt more towards PSU banks? And within the PSU banking pack, would you look at the large ones or the mid-cap ones?
If you look at the lending, the private sector banks about 80-85% in the EBLR. A lot of it is repo linked, whereas in the public sector banks about 30-35% is the EBLR. Again, a lot of it is repo linked. So today, the large part of the PSU banking system is more MCLR based, whereas the private sector bank is more EBLR based. So the transmission in the private sector banks will be immediate, whereas the public sector banks would have to go through their own motion. Then probably a large many of the borrowers would now want, especially the corporate ones, would now want to switch over to the EBLR system. So this transmission will take its own time in the PSU banking system. The larger problem for them would be in terms of the large borrowers moving towards the bond market. That I think would be a larger hit, and they would have to reduce the rates throughout the system to save that.
Sure. Last question really, I also want to get in the valuation picture, for PSU banks. Valuations at one point in time were 0.5 price to book, but now they've increased to 0.8, 0.75, in that range. Do you expect the gap between private and PSU banks to get narrowed further? What's the picture looking like right now?
So first we discuss the PSU banking space. The PSU banking space has seen very good days of late. The largest issue in the PSU banking space was the credit cost, and now the credit costs are absolutely low, something around 50 basis points. Even the net NPA is very low at 50 basis points. So the picture out there is very good. Having said that, now we probably have seen the end of the credit cycle, and that's what we've been saying for last almost 12 months now. So neither the NPA figures nor the credit cost figures would go down from here. That is issue number one. The issue number two is we see a constant sort of a reduction in the net margins, NIMs as we call them. So NIMs have been declining over the period, and the system level NIMs are something around 3% right now. We expect some bit of further decline for let's say 6 to 12 months when the lending rate will go down immediately, but the deposit rate will take its time to reprice. So the NIMs will also get impacted. The credit cost decline which was there remains where it is. The OPEX also seems slightly steady. So we see that the overall return on assets would continue to have some bit of negative pressure. The profitability growth will have to come from the increase in the balance sheet size. And as I said, the capital is not an issue. Everybody is very, very capitalized. So the banks would be able to grow the balance sheet provided they are able to fight it out in the market. So this is a new sort of a phase we are seeing in the
Sure.
banking sector where the fight is on the market space and not on the rates as such. The rates would tend to be negative. Having said that, the latest pattern that we see in the last 3 to 6 months is that the banks have sharply declined, reduced the deposit rates. Now that is the posturing that the banks have done, given the fact that the deposits are short. So whether the banks will be able to succeed, because some banks may actually start losing the market share, and then the internal management would have its own issues. Like right now, banks have largely moved away from the bulk deposits, right? Now, so similarly, and the banking sector was also asked to move away from the high yield lending assets. Let's say the unsecured personal loan and some bit of NBFCs, etc. Now the low yield assets will move out because they'll move to to the bond market. So it's a bit of a situation which we'll have to see. But two things are very clear right now. For some time we'll have NIM pressures, and the that would reflect into the pressure on the ROA. That's as far as the PSU banking space is concerned. And the private sector banking space, again, they had the challenges of the deposits. So the deposit challenge now seems to be reducing because the larger private sector banks, they have been able to make good bit of the business loss. So while we see that the larger private sector banks, the private sector banking asset growth was about 9%. But if you include the asset which they have sold off during the year by securitization, PTC, etc., the asset growth actually is higher at 10, some slightly higher than 10. So the business is good out there. They've been able to stabilize the deposit rates. So there the competitive strength seems to be slightly higher. Having said that, the NIM pressure would remain for some time, and probably it will take us 6 to 12 months to find out whether the banks are able to fight back on that.
Sure. Sanjay, I had more questions for you, but due to paucity of time, I can't pose them to you. But I will get you on one of our morning shows soon, and I'll get those questions addressed. Would like to thank you for taking out time and joining in, nevertheless.
Thank you. It's a pleasure for me, and thank you very much.
Thank you. I want to point. Thank you. Take a look at the market. We've broken out at the 25,000 range now. In fact, we are above that 25,000 mark for the first time, I think, since late May. I think 27th May. Since then, it's the first time that we've hit that 25,000 mark once again on the index. So, to take stock of the technicals, let's bring on board Jatin Gedia, technical research analyst at Mirae Asset Share Khan. Jatin, was this the push that was needed for the Nifty to come out of that narrow range that we've been trading in? And look at the bank Nifty, completely fired up, 56,600. The index has made a fresh lifetime high, despite concerns over near-term margins. How are you looking at the market? Has there been a clear signal of a breakout, and here on, can we expect to be above these levels of 25,000, 25,100?
Yeah, good afternoon, everyone. So, as far as the Nifty is concerned, Nifty is still yet to break out of that range about 25,100. However, the trigger has been definitely provided by the RBI in today's policy. So, Bank Nifty is trading now at an all-time high. So, that is definitely looking upwards towards 57,000. 757,800. That's a clear 1200 point kind of a rally that we can see even from current levels. So that should be a clear cut winner going ahead. Nifty on the other hand is still consolidating in that range. However, we believe that yes, there is a high probability that the Nifty is also likely to break out of this 3-week consolidation that is happening between 24,500 and 25,100 during some part of next week. So overall things are looking positive. The trigger has finally come in for the benchmark index to break out of that range on the upside.
Okay, that's the view. But anything on the autos, on the auto side that you like? Because the auto index is also up 1.5% or so. Would you look at some of these names like Hero, Bajaj? How are they poised on the charts?
Yeah, see, overall, I think all the interest rate sensitive sectors are likely to have a clear-cut win from this today's RBI policy. If I have to give a recommendation from the auto pack, then Bajaj Auto would be my preferred pick because recently it has undergone some amount of pullback towards its 20-day average, and now it's showing strength or indicating resumption of the up move. So Bajaj Auto would be the preferred pick from the auto pack. If I have to give levels, then we are expecting 9,000, and one should keep a stop loss of 8,400 in the case of Bajaj Auto. One more stock that I would like to highlight is everybody's favorite Mahindra and Mahindra. So that from the four-wheeler pack is looking positive. The structure is more or less of that of a consolidation, and we believe that the stock is poised to touch an previous all-time high of around 3275 or even 3300 in the short term. So that is another recommendation from our end. One needs to keep a stop loss of 2990 for long positions in M&M. So Bajaj Auto and M&M would be a preferred fix.
Picks from the auto space. But on that note, let's also bring on board Nirav Karkera, head of research at FISDM. Nirav, what a fantastic Friday, turning out to be both on the policy front and the way the markets are rejoicing. 25,000 back on the charts, a 250-point up move, and the Nifty Bank Index, of course, deserves mention, lifetime highs. How would you rate this policy? And, some views that I heard was that, the signals were a bit confusing. Although the governor has taken a leap of faith, has given a 50 basis point rate cut, 100 basis point CRR cut, even if it's in a staggered manner, the stance has been once again changed to neutral. How are you looking at it? Are you confused, or are you pretty sure that it's a pro-growth policy, and here on it will lift growth and lift credit growth as well going forward?
So Nandita, one thing at the outset, I feel this has been a wonderful policy update, and I feel there is no confusion. This is indeed a pro-growth stance that the central bank has taken, right? Because it has effectively front-loaded the rate cut, the headroom for the rate cut that we had. It has all been front-loaded immediately into this current policy committee meet, right? And by changing the stance from accommodative to neutral, what it is effectively communicating to the markets at large also is that most of the headroom that was available has been very aggressively front-loaded into this rate policy. And so we do not expect a further rate cut to come in anytime soon. So the change in stance is in an effective way to communicate and basically set expectations that this is not the start of a series of a rate cut. So the best that could have been done is being done on an aggressive and front-footing basis. So it is a very well balanced policy, I would say. In fact, it is pro-growth, it is pro-liquidity. In fact, while the 50 bips cut itself is a mega cut, the entire reduction of CRR by 100 bips is expected to have wide ramifications and multiplier effects across the economy, right? And it starts from improving the liquidity situation that is, just by the way, as we speak, already in a decent surplus. Right, so we are expecting this to hopefully kickstart a virtuous cycle. Of course, this relies heavily on the effective transmission through the banking system. But if once that cog is in place, I feel the wheels start spinning much more smoothly, and we may finally see the virtuous cycle of capital offtake and consumption demand and private capex finally kicking off from here on.
Okay, I know one of the quotes, somebody, I think Nilesh Shah, I was just reading his quote, and he said, now Trump may request US Fed to follow the RBI, although he has been asking, the Fed chairperson to, cut rates, but following the RBI's move, perhaps he could do the same again. Even Bodhi, we had him here in the studios, he was also pointing out. But, serious question really now. What happens to banking space in terms of margins? How does the banking space tackle this? Because they were gearing up for a 25 basis point rate cut, 50 has happened. So near term margin pressure, tactically, how would you look at banks in the wake of this?
Yes, so near-term margin pressure will sustain. In fact, we saw most banks exit FY25 with a lot of pressure on their margins. So the current quarter also may sort of extend that pressurized environment. But however, having said that, the CRR easing up is expected to give banks a lot more lending headroom, right, and much more ability to further
Hmm.
improve their margins going ahead. So second half FY26 onwards, we believe banks will be much better positioned in terms of their margins and overall growth in advances. However, in the near term, existing pressure on the margins will continue to sustain for a little bit longer. So the way we look at it is perhaps the first quarter will be a sustained pressurized environment. The next quarter after that will be a
Hmm.
transitory one, and second half FY26 is when things start looking up finally for banks. It takes away, so the policy also takes away a lot of pressure off the unsecured assets, right? And this comes amidst a time where the books were anyway improving in health. So net, this is accretive to banks. It is just
Hmm.
a matter of time. So it's a matter of when and not if bank margins are going to improve.
Hmm. Okay, that's the view. But since Jatin is also here with us, Jatin, from the banking pack, what are the stocks that you would prefer, and even the consumer discretionary space, lending rates going down, good monsoons, purchasing power goes up. So, technically, anything that's on your radar?
See, I believe that SBI, which is the largest PSU bank, is likely to, now come into the limelight because it has been lagging behind, and now I believe that all the triggers are in place for that to outperform. So I think SBI should be a preferred pick from the banking space. We are expecting levels of 935 to even 950 from a short-term perspective, and one needs to keep a stop loss of 803 for this long recommendation. So SBI would be our preferred pick. Apart from that, some of the private sector bank like IDFC First Bank is also looking very positive on the charts. It is witnessing a trend reversal, a breakout from a symmetrical triangle pattern on the daily chart. So IDFC First Bank is looking positive. 68 is a crucial support for IDFC First, and on the upside, we are expecting levels of around 76 to 78 from a short-term perspective. So SBI and IDFC First Bank would be the preferred picks from the banking space.
Hmm. And about the consumer discretionary space, anything from there?
I think Titan should do well going ahead. So, in the case of
Hmm.
Titan, we are expecting the up move to resume. It has been in an uptrend. We are expecting 3,700 in the case of Titan. It has undergone some amount of consolidation, so that would be a preferred pick. On the downside, the support level is placed at 34.50. Apart from that, Trent is also looking positive. So Trent is was in a downtrend. It is
Hmm.
now reversed its trend to upside. The crucial support for Trent is around 56.25, and on the upside, I'm expecting around 6,000 levels in the case of Trent. So Titan and Trent would be the preferred picks from the consumer discretionary space.
All right, that's the thought then. Titan, and Trent looking attractive from the consumer discretionary space. Just about a couple of minutes to go for the presser to start. Nirav, anything in particular that you'll be watching out for from the presser in terms of commentary and clarification,
So,
so to say?
uh, so I feel a lot of the pressure will be focused on clarifying on the CRR cut and what plans do they have to additionally manage liquidity through OMO, Right. Of course, the address itself was comprehensive enough and it answered most questions. However, the CRR cut and the schedule, while they mentioned it will happen through September and November, what are the additional steps that the central bank will take to ensure effective monetary transmission? So that is one pointer. Most of most would be on the lookout for, and perhaps. A little bit more around along with the open market operations and probably in line with it as well, do they have any roadmap planned or any indicative guidance on any sort of target systemic liquidity if they're looking at, if at all relevant to whatever the commentary is?
Anything on the gold loan space that you would expect from the RBI governor? Because, of course, last policy, we saw knee-jerk reaction on stocks of Manappuram, Muthoot, etc. On the back of tighter norms that were proposed by the RBI. Then again, we had the government batting for lower ticket loans like 2 lakh and below. Here on, do you expect any clarification to come in today itself, or do you think that will happen off policy? And how do you view these stocks now?
So there is good reason to believe that this further clarity will come in off policy. So I'm not really expecting it to come up in today's briefing. Having said that, the stocks that we spoke about and the segment, it continues to be at the center of developing events. So we will be able to comment on it much more strongly once more clarity emerges, especially from the central bank side.
Thank you.
All right, Nirav, with that, appreciate your joining in this afternoon. We're just about to cut to the governor's press conference. I think he's ready to speak, so let's cut across.
Sure.
Thank you so very much. May I start, sir?
Yes, of course.
Let's start. Hello and good afternoon. Welcome to this post-monetary policy conference, press conference, second in this financial year. Friends, today we have with us Governor Shri Sanjay Malhotra, Deputy Governors Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, Shri Swaminathan J. and Dr. Poonam Gupta. I would take this opportunity to welcome Dr. Gupta to this press conference after taking charge as the Deputy Governor. We also have with us Executive Directors Dr. Rajiv Ranjan and Dr. Ajit Joshi and other friends from Reserve Bank. Before we begin, I'll request all of you to please either switch off your mobile phones or keep it on silent. Please restrict to one question per person so that everybody gets a chance, and then maybe going forward we can take another question if time permits. And when you are asking question, please see that you switch on the mic which is in front of you, because that's how the people listening to this transmission would be able to hear whatever is transpiring here. And once you are done, please switch it off to avoid the interference. So there are 23 participants from media today, and with your permission, I'll call out the names. I'll ask Lata to ask her question.
Thank you, sir. Lata from CNBC TV 18. Governor, thank you very much for the opportunity and for a policy that is giving us a lot of headlines. Okay, I wanted you to clarify things on the liquidity front. In the last few weeks, the repo rate, the call rate was not at the repo rate. You gave enough liquidity and the call rate was 25 basis points below the repo rate. Now that you have given a 50 basis cut, will you use liquidity in such a way to align the call rate more to the repo rate, which means you will do more VRRs, reverse repos, or will the reverse repo have to be suspended because your 40 billion short positions have to be, will mature? So if you can give us a little more color on liquidity, and on the stands itself, is it fair on the part of the market to assume an extended pause, or because the positive real rate, I mean, if you assume that that 1.4 to 1.9 positive real rate is what you are also going by, then with inflation at 3.7, you still have space to cut. So should the market assume that the terminal rate can still go down after the pause?
Yeah, so first of all, thank you, all of you, for coming here as usual and taking our message to everyone across the country. So thank you very much. You have asked 3 questions in 1 question, but we'll try to attempt to answer all of them. So first question is a very good question. In fact, what do we do with liquidity? Where do we actually maintain now the call rate? The call rate today is hovering at the lower end of the LAF as it was till yesterday. So it was at about 5.75%. Whether we now maintain it at 5.25 or at the policy rate, which is at 5.5. That's, as I said, we'll see how the situation goes. Of course, liquidity is abundant, and if we do not do any VRRR, then it's going to stay at 5.25. If we do VRRRs, then, we can bring it anywhere between, depending on the amount. So we'll see, how the situation evolves, and we'll take a call. We have not really given it a thought on that, so we will decide. And you will come to know, in the coming few days. I'll not be able to give you a very precise answer. But having the policy at 5.5, and the stance, now going to neutral, so all that will, certainly come in the picture. We will take a call as to where, we will try to have the call rate. The second question is on where do we see the terminal rate. The MPC, I think, has very clearly, articulated that in the statement, in the resolution that has come in. We have changed the stance from accommodative to neutral. And it has mentioned that there is now very limited space for the monetary policy, actually, given the current circumstances. And you are aware of the current circumstances, which is that growth is at about 6.5%. Inflation, we are projecting at 3.7% for this year, and next year it's above 4, it's 4.5% or roundabout. So given these current, if these were to play out, there is very limited space, is what MPC says, and that's why it has been reduced now. We have changed now to neutral. MPC also states that we will continue to monitor the incoming data, and basis that, given especially the uncertainties, what way now we will move will depend primarily on what the data suggests to us. There was a third question which what was your? That's it. Thank you. So I've answered.
What I wanted.
Yeah, thanks.
If you can allow me another question, I will.
Yeah, we'll come back later. Come back and see if there is time.
Thank you, sir. Next we'll have Mr. Mayur Shetty from Times of India.
Governor, you spoke about the uncertain environment, and a lot of uncertainty is coming from the behavior of the US administration, and that is also resulting in a lot of volatility in dollar assets. So given this, how would you balance between rebuilding the forex reserves and managing exchange rate volatility?
See, our policy over there is very, very clear. It has been very consistent, and we do not manage, or try to target any price, any level, any band. You are aware of that. If there is any abnormal, that's a standard response, right? Any abnormal volatility, if it is there, that is what we try to counter, and we let the market prices be determined, prices be determined by the markets. Now, this question, and I think that was something that even Lata alluded to, and that was the third point, I think, that you mentioned.
The 40 billion.
Is, this 40 billion, etc. We are not unduly concerned about that. Even if you were to exclude that $625 billion, if you were to exclude this $65 billion, including, the one after 1 year that is coming in, we are not unduly worried, on that. It's a very, very comfortable level to be in. Yes, if there are opportunities and we can build reserves, that will happen. But that is not something which we will be unduly be bothered about. Thank you.
थैंक यू सर। अब मैं श्री अनुराग शाह से आग्रह करूंगा कि वो अपना प्रश्न पूछें। अनुराग शाह, ET 9 स्वदेश से।
थैंक यू सर, थैंक यू सर। जो सर ने इतने बड़ा धमाका कर दिया, सबको चौंका दिया, जो मेन प्रश्न लेके आया था सर वो भी पूछूंगा साइड में। सर ये आज की जो ऐलान से क्या बड़ा मकसद है और क्या संदेश आप देना चाहते हैं ब्रॉडर रूप में?
नहीं, ब्रॉडर रूप में देखो, संदेश हमारा यही है कि इन्फ्लेशन, आपको मालूम है मुद्रास्फीति इन्फ्लेशन पे अब काफी जो है नियंत्रण में है, और वो जंग जो है हम ये मान सकते हैं कि उसके ऊपर में हमने जीत हासिल कर ली है। तो एक मैसेज है, क्योंकि हमने 4% से उसको घटा करके जो हमारा अनुमान था उसको 3.7% किया है मुद्रास्फीति को। उसी प्रकार से जो ग्रोथ है वो 6.5% है, अच्छी है, लेकिन उसमें और गुंजाइश है, उसके अंदर में और बढ़ोतरी होने का। तो जो भी हमें कार्य करना है, हम ये बिलीव करते हैं कि वो डिसाइसिवली करना चाहिए, सही समय पे करना चाहिए, और एक जो निश्चितता है, इस अनिश्चित वातावरण में निश्चितता मेरे ख्याल से जो है हमें मार्केट्स को, सभी को, बैंक्स को, इकोनॉमी को निश्चितता देने का बहुत अधिक जरूरत थी। इसी वजह से ये जो आपने देखा कि एमपीसी ने कहा कि हमने फ्रंट लोड किया है, ताकि एक ये निश्चितता रहे कि हाँ 50% हमें बेसिस पॉइंट्स कम करना है, तो एक साथ ही उसको कर दिया। उसी प्रकार से जो सीआरआर का है, हम चाहते तो हम इसको 4 महीने बाद भी अनाउंस कर सकते थे, हमने आज ही अनाउंस कर दिया पहले से ही, ताकि लोगों को, बैंक्स को ये निश्चित हो जाए कि लिक्विडिटी, जो कि हमने कहा जरूर है लेकिन वो एक्शंस में भी तब्दील होना चाहिए, तो वो एक्शंस में हमने अपने तब्दील किया कि जो सीआरआर है वो एक हमने उसको आज ही घोषणा कर दी। तो निश्चितता जो है जितनी होगी उतना हमें लगता है कि उससे हमारी जो अर्थव्यवस्था है उसको बल मिलेगा, और यही हमारा संदेश है कि हमारी अर्थव्यवस्था अच्छी चल रही है, और उस अर्थव्यवस्था को दोनों मुद्रास्फीति को ध्यान में रखते हुए, वो हमारा प्रमुख संदेश है, उससे हम बिल्कुल नहीं भटकेंगे। वो हमारा प्रमुख प्राइमरी हमारा जो मोटिव है कि प्राइस स्टेबिलिटी, मुद्रास्फीति को हम कंट्रोल करें, उसके ऊपर में हम अंकुश लगाएं, और जो हमारे को टारगेट दिया है उस टारगेट की ओर हम उसको ले जाएं। जब वो हो जाए तो उसके बाद में हम जो ग्रोथ है, ग्रोथ के ऊपर भी हम ध्यान दें, वही हमने इसमें किया।
जो स्टांस आपने चेंज किया सर, पिछली पॉलिसी में ही आप न्यूट्रल से अकोमोडेटिव आए थे, और इस बार वापस एक ही पॉलिसी में आप वापस उस स्टांस पे चले गए, तो उससे कहीं एक मैसेज गलत नहीं जाएगा?
गलत मैसेज से मैं नहीं समझा। हाँ, ये बात आप जरूर कह सकते हैं, ये बात हमारे भी दिमाग में थी कि हमने पिछले बार ही तो इसको अकोमोडेटिव किया था। हमारे पास में चॉइस ये था कि हम उसको अकोमोडेटिव रखते, जो हमने बोला था, जो मैंने आपको कहा कि बोलते रहे कि अकोमोडेटिव है लेकिन करें नहीं कुछ, तो एक्शन जो है वो ज्यादा इंपॉर्टेंट है, और जो भी हम बात कर रहे हैं वो एक्शन में तब्दील होना चाहिए। इसीलिए जो है हमने उन हमारे जो स्टेटमेंट्स रहे इंटेंट के, अकोमोडेटिव केवल एक इंटेंट था, उसको हम अकोमोडेटिव रखते रखते नहीं चेंज करते, अकोमोडेटिव ही रखते, तो क्या वो बेहतर रहता, या हम सर्टेनिटी दें कि हाँ हमने अकोमोडेटिव से जो हमने आपको वादा किया था कि हम इसको रेट को कम करेंगे, डिसाइसिवली कम करेंगे, वो हमने किया, और स्टांस को हमने न्यूट्रल कर दिया है। आज के सर्कमस्टांसेस में जो स्थिति बनती है उसके हिसाब से बहुत कम गुंजाइश, जैसा कि एमपीसी ने नोट किया कि उससे बहुत कम गुंजाइश अब रह जाती है, वेरी लिमिटेड स्पेस, उन्होंने कहा वेरी लिमिटेड स्पेस, तो कम गुंजाइश रह जाती है आगे और पॉलिसी रेट्स को कम करने की। ये एक पूरा संदेश हम दें, इसीलिए उसको न्यूट्रल में किया गया।
धन्यवाद सर। मूविंग टू दिस साइड ऑफ द टेबल, मिस्टर मनोजीत शाह फ्रॉम बिजनेस स्टैंडर्ड।
Good afternoon. Thank you, Punitji. Again on this stance, I mean,
Thank you.
this policy has several surprises. The most surprising part is the stance. As you said in the last policy, the accommodative means the rate can go down or it can stay there. So in that, so neutral would mean the rates can go up. Are you saying rate will not go up, but there will be a long pause? And whether there is a voting on stance, if you can.
It will depend. See, it will depend on data now. This is what neutral means. We had explained it in our earlier MPC. I had explained it in the earlier MPC statement that neutral will mean that it can go either ways. It will depend on how the data comes in. If the growth is weaker, it can mean that it will go down. If the growth is good, inflation is going up, it can mean that the repo rate policy rate can go up. So it will depend on how the data, both on inflation as well as growth, turns out to be.
Was there voting on stance this time?
Stance, we have already mentioned that there is no, the statute does not, mandate a voting. There was a discussion on it, certainly, because we need to give a sense, we need to give a guidance. It's more of a guidance that we have to give to the market participants. And so there was a discussion, and everyone, all the 6 MPC members were of the view that we should change it to neutral. So there was no voting, but the view of all the MPC members is that going forward, the stance should be changed from accommodative to neutral.
Also, if you can add just one more, are you satisfied with the monetary transmission that has happened so far?
I think it has, going by past trends, the transmission has happened much faster, both on in the money markets. In fact, you can see a huge transmission, more than what we have done, more than 50 basis points in the money markets at the shorter, especially at the shorter term levels. And on the credit side also, we are now seeing some initial signs. Deposit rates, in fact, have been reduced, retail as well as wholesale, by most of the banks. About 40 basis points, they have reduced. The average, of course, is about 27 basis points. It has reduced over there. 17 basis points is the reduction on the credit side, on the outstanding credit. And in terms of fresh loans, there is, that's a little slow, but it has started. It is about 6 basis points as per data that we have. So that's slow, but it is much faster than other times. Normally, it takes 6 to 9 months. It's only been 4 months from the first policy cut. So from first policy cut, or 25 basis points, against that, if 27 basis points on deposit side, 17 basis points on the credit outstanding side, and 6 basis points on the fresh loans, I think this is a very good transmission. However, we need to do it faster. And that's why we have front-loaded some of our actions.
Thank you so much.
Thank you, sir. Next, we'll have Mr. Vishwanath Nair from NDTV Profit.
Good afternoon, Governor. Couple of questions, actually. The first one with respect to your GDP forecast, which has not changed. The estimates have not changed at all. What is the growth boost that you're expecting from this cumulative 100 basis point rate cut that you've afforded? And thereby, would there be a revision for FY26? And the second part is on the stance itself. I'm asking you again, in the past there has been criticism that the stance is more or less becoming meaningless because we kept saying withdrawal of accommodation, but it was a prolonged pause. Is this a way to then bringing it back into relevance?
So your first question is what impact it has on growth. Obviously, it has a positive impact. It will be very difficult to assess as to how this transmission from monetary policy to the credit rates and then to the real economy, how that transmission happens. As you are aware, it takes minimum of, going by history, 6 to 9 months. We would like, of course, to expedite it, but we'll see impact of this only in the later half. So for this year, in terms of numbers, especially when there is so much of an uncertainty, we would not be in any position to give you how it will, to what extent it will impact the GDP numbers. The second question is on, I mean, I can't actually speak about the past, what has happened, but our policy will be very, very clear. Whatever we are saying, we mean it, every bit of it, and you will continue to experience that.
Thank you, sir. Next is Ms. Swati Bhatt from
also
the right.
to be kept in mind is, whether it is past or present or future, a lot of it is dependent on data. So if the data kind of changes, even if it is, say, accommodative or tightening, it does not necessarily mean, that next policy itself, you are going to tighten it or you are going to reduce the policy rate. It does not mean that. It depends on how the data is actually coming in, and how, what that data is showing. So if that data demands that you have to actually stay put, even if it is accommodative, it will. That's how it will be done.
Thank you, sir. Next will be Swati Bhatt from Reuters.
Thank you, Puneet, sir. Sir, I just wanted to understand, you have front-loaded the rate cuts and the certainty obviously helps. But we've seen that despite the massive surplus liquidity that has been there in the market, there is very limited scope to lend because there is genuine lack of demand from companies and corporates. There's not much capex happening as well. How does this liquidity really translate to boosting growth? What is the advantage of having so much flush of liquidity in the banking system? Similarly, on the CRR front as well, obviously you planned it in advance and announced it now. But CRR historically has been at the 4% sacrosanct level to some extent. Is there a renewed thinking on the CRR front, which is why you've gone ahead and cut it to 3%? Thank you.
Can I just add, nowhere you have told us why you cut the CRR. What was the RBI's thinking?
So let me take the second question first. I think the monetary policy statement that I read out, it did mention that it has two objectives. The first objective is that we need to, continue to provide liquidity, and I'll come to your first question relating to liquidity. And then we also mentioned that it will not only improve liquidity, but it will also help reduce cost of funding for the banks. So that is the other objective. And see, over the years, last 12, 13 years data I've seen, and one can even go back, the CRR has mostly remained at 4%, as you have rightly pointed out. During COVID, we reduced it by 1%. Now these reserves are basically kept for liquidity management. So the experience as of now does not suggest that perhaps, we do not need 4%. 3% can perhaps suffice. Having said that, we do not know what the future holds. So please don't hold me, to this number that, we are going to maintain this 3%. But as of now, it seems that 3% is a comfortable reserve ratio to have. And so from a liquidity management perspective, and so that's why, apart from providing liquidity, it will also reduce their costs and improve their NIMs by about 7 basis points at least. It should help, is our estimate. Why do we provide liquidity? So that, there is a better transmission, there is a faster transmission, and it is primarily, it's basically for that. Thank you.
Thank you, sir.
We'll take the next question.
Because so far banks are not lending. So how does that demand come in?
It will depend. We have said, even in the statement, that this is not a sufficient condition. Monetary policy is not a sufficient condition. It is a necessary condition. We have provided that. We are confident that it will certainly translate into better credit growth. I am not able to give you a number. Obviously and certainly, with confidence, one can say that it will certainly increase, the flow of credit. And so that's why, this liquidity is important. A reduction in repo rate is important. To what extent and what time frame it will take, that will be difficult to say.
Thank you, sir. Next will be Mr. Ankur Mishra from ET Now.
Thank you, Puneet sir. Good afternoon, Governor. I want to understand from you that you have given a statement in the monetary policy that today's steps should be seen towards propelling to a higher aspirational trajectory. You're talking about growth. You have kept your target intact at 6.5%. Is there a scope of further revision ahead which should be expected with the kind of actions you have taken? And also, I will once again ask on the stance front, but in a cricket analogy, if you can explain, it was a roller coaster kind of a policy. We saw you announced 20, expectation was 25 basis point, you announced 50 basis point cut. Similarly for CRR, the expectation was 50, you announced 100. But on the stance front, you got back to the crease and said, I'll wait and watch. So how should one understand?
Well put. The target, you are saying that the target, the 6.5% is not the target, 6.5% is the forecast that we have made.
Sorry.
And the aspiration is certainly much more, between 7 and 8%, is our aspiration. Aspiration is 8%. We would like to grow, as fast as possible. You have said it all, I don't have to say anything more, on, you have put it out very well. As to what this monetary policy, because everyone here in India, they may not understand our monetary policy, but they will understand the cricket lingo. So you put it out very well for your viewers.
Thank you, sir. अब मैं जी बिजनेस से एकता सूरी को आमंत्रित करूंगा.
Policy has been very well received by the markets. However, I want to ask questions which are a little different from the market how they've received it. So मेरा पहला सवाल होगा, पिछली पॉलिसी में हमने गोल्ड लोन्स के ड्राफ्ट के ऊपर बात की थी. उस पॉलिसी से लेकर अब आज की पॉलिसी में आपने कुछ चेंजेस सोचे हैं? क्योंकि बहुत से लोगों को ऐसा भी लगता है कि अगर सोना हम गिरवी रखने जा रहे हैं तो हो सकता है हमारे पास ओनरशिप का कुछ प्रूफ ना हो, क्योंकि वो हमें अपनी मदर या किसी और से मिला हो, या फिर हॉलमार्क ना हो. तो ऐसे जो ट्वीक्स हैं आप सोच रहे हैं नियमों में बदलाव? और दूसरा ये भी, क्योंकि अब हम देख रहे हैं कि फॉरेन बैंक्स की बहुत दिलचस्पी है भारतीय बैंक्स में, तो आप FIIs को लेकर भी कुछ नियमों में बदलाव सोच रहे हैं? 26% का जो वोटिंग राइट है वो भले ही सरकार के पास है, या फिर फॉरेन बैंक कितना स्टेक ले सकते हैं भारतीय बैंक में?
अच्छा, आपने सवाल किया है जो गोल्ड लोन के बारे में, ये भी काफ़ी चर्चा में रहा है. मुझे लगता है कि ये सभी के लिए एक रुचि का विषय होगा. तो इस पे निश्चित रूप से आपका सवाल जो है बनता है. और मैं आपको बताना चाहूँगा सबसे पहले कि जो गोल्ड लोन के बारे में जो हमने रेगुलेशंस जारी किए थे वो केवल ड्राफ्ट थे, मसौदा थे, वो फाइनल नहीं थे. आपको ये भी बताना चाहूँगा कि हमने अब एक फ्रेमवर्क रेगुलेशन मेकिंग के लिए हमने एक जारी किया है, जो सबको हमने पब्लिक नोटिस के थ्रू हमने सबको बताया है कि कोई भी मेजर, जब भी हम कोई परिपत्र या रेगुलेशन या डायरेक्शन इशू करेंगे तो उससे पहले हम दो चीज़ें करेंगे. एक चीज़ हम कंसल्टेशन करेंगे, दूसरा हम उसका क्या इम्पैक्ट है उसका हम स्टडी करेंगे. तो उसी को ध्यान में रखते हुए ये भी हमने मसौदा गोल्ड लोन के बारे में हमने जारी किया. दूसरी चीज़ बताना चाहूँगा कि ये जो हमने जारी किया है इसमें कोई नयापन नहीं था, इसमें कोई नई चीज़ नहीं थी, ये केवल कोई नई बात नहीं थी. पुराने जो हमारे परिपत्र थे, पुराने जो रेगुलेशंस थे, उन्हीं को हमने कंसोलिडेट किया था, उनको कंसोलिडेट किया था और उनको रिआइटरेट किया था. क्योंकि ऐसा देखा जा रहा था कि कुछ जो हमारे रेगुलेटेड एंटिटीज हैं उनको वो अक्षरतः पालना नहीं कर रहे थे, क्योंकि उसमें क्लैरिटी नहीं थी और इसके बारे में उनको बताया गया था. इस कारण से इसमें कोई नयापन हालांकि नहीं था, लेकिन फिर भी जब वो बात बिल्कुल ब्लैक एंड वाइट में सामने आ गई तो इसलिए उसके ऊपर में हमारे पास में उसके कमेंट्स आए. तो मेरे ख्याल से आज ही हम जो है उसका फाइनल जो रेगुलेशन है, फाइनल डायरेक्शन है, आज नहीं तो एट द मोस्ट मंडे, सोमवार तक हम उसको जारी कर देंगे. आपने जो बात कही ओनरशिप के डॉक्यूमेंट्स के बारे में, वो जो हमने ड्राफ्ट जो इशू किया था उसमें भी ये बिल्कुल क्लियर लिखा हुआ है कि अगर आपके पास में उसके इनवॉइस नहीं है तो आप उसका एक सेल्फ डिक्लेरेशन आप दे सकते हैं। तो उसमें कोई चिंता की बात नहीं थी, उसको और हम उसमें और क्लैरिटी हम प्रोवाइड करेंगे। दूसरा ये एक बात आई कि क्रेडिट अप्रेजल, अब छोटे छोटे लोन के लिए क्रेडिट अप्रेजल नहीं किया जाए, तो वो भी हम इसमें डाल रहे हैं कि छोटे जो लोन्स हैं 2.5 लाख रुपए तक के जो लोन्स हैं उसमें गोल्ड से जो जिसमें कोलेट्रल आ जाता है उसमें क्रेडिट अप्रेजल की आवश्यकता नहीं है। तीसरा एक एंड यूज के ऊपर में बात आई थी कि एंड यूज की मॉनिटरिंग करनी है, उसमें भी हमने ये स्पष्ट किया है कि एंड यूज की मॉनिटरिंग तभी आवश्यक होगी जब आप उसका प्रायोरिटी सेक्टर लेंडिंग में उसका लाभ आप लेना चाहते हैं। चौथा और पांचवा जो कि महत्वपूर्ण प्रश्न एलटीवी के संदर्भ में है, वो हमने कहा है कि एलटीवी केवल जो कंजम्पशन लोन्स हैं उसमें ही, कंजम्पशन लोन्स में ही एलटीवी का सिद्धांत लागू रहेगा। बाकी में आप क्रेडिट अप्रेजल करेंगे, उसकी और अन्य इनकम्स हैं और सिक्योरिटीज हैं, उसके हिसाब से अगर एलटीवी रेशियो से ज्यादा भी देते हैं तो वो रीपेमेंट कैपेसिटी के बेसिस के ऊपर में उसका आकलन करके वो दिया जा सकता है। और पांचवा और महत्वपूर्ण जो प्रश्न है एलटीवी से ही संबंधित है कि वो 75% हमने उसमें अभी आज के दिन में हमने ड्राफ्ट डाला था, उस 75% को हम छोटे लोन्स के लिए 85% तक करने का हमारा प्रस्ताव है। 85% छोटे लोन्स के लिए, बिलो 2.5 लाख के लोन्स के लिए पर बोरोवर 85%, लेकिन इस 85% में इंटरेस्ट जो है वो भी इंक्लूड करना होगा। तो पहले वो केवल हमारा 75% था और प्रिंसिपल एंड इंटरेस्ट का ही था, जो कि कुछ कंपनियां पब्लिक सेक्टर बैंक्स जो हैं, अधिकतर सभी पब्लिक सेक्टर बैंक्स 75% पे ही दे रहे थे, इंक्लूडिंग इंटरेस्ट प्रिंसिपल। इसलिए वो प्रिंसिपल जो है केवल 65, 66, 67% तक ही दे रहे थे। लेकिन कुछ अन्य एनबीएफसी इत्यादि और कुछ छोटे बैंक भी हो सकता है, वो जो है 75% प्रिंसिपल दे रहे थे, तो इंटरेस्ट मिला करके बुलेट रिपेमेंट लोन में विशेषकर वो 88% तक भी चला जाता है, क्योंकि अगर 18% का लोन है तो आप रिवर्स कैलकुलेट करोगे तो वो 88% तक चला जाता है। तो छोटे लोन 2.5 लाख रुपए तक के लोन के लिए इंक्लूडिंग इंटरेस्ट 2.5 लाख प्रिंसिपल प्लस इंटरेस्ट। तो ये पूरी स्पष्टता जो है हम अपने सर्कुलर में देंगे। हमें उम्मीद है कि इससे जहां पे मिनिमम रिस्क के साथ में इस गोल्ड लोन की श्रेणी को हम अच्छे से रेगुलेट कर सकते हैं। दूसरा आपका प्रश्न है कि क्या हम एफआईआईज वगैरह के लिए हम कुछ लिमिट्स वगैरह, फॉरेन बैंक्स वगैरह के लिए लिमिट्स वगैरह कुछ बढ़ा रहे हैं। तो देखिए ऑलरेडी लिमिट्स तो 74% की लिमिट है, ऑलरेडी 49% की लिमिट है ऑन ऑटोमेटिक अप्रूवल रूट एंड अनदर 25% तो अप टू 74% गवर्नमेंट अप्रूवल रूट में जा सकते हैं। तो उसमें तो कोई बदलाव की आज के दिन में कोई ऐसी कोई बात नहीं है, उसमें कोई चेंजेस मुझे नहीं मालूम ये प्रश्न कहाँ से आ रहा है कि उसको हम चेंज कर रहे हैं। एक दूसरा उससे जुड़ा हुआ है 15% हम अलाउ करते हैं नॉन रेजिडेंट्स के लिए, लेकिन केस टू केस बेसिस पे 15% से ऊपर भी वो जा सकता है। तो उसमें कोई ऐसा बदलाव अभी अति शीघ्र कोई भी बदलाव उसमें नहीं हो रहा है। हाँ, हमने ये इस बात जरूर कही है कि हो सकता है उसका आप लोगों ने उसको आपने देखा हो, कहीं पे पढ़ा हो, कि हम ये पूरा जो ओनरशिप स्ट्रक्चर है, जो एलिजिबिलिटी कंडीशंस हैं, जिसके अंदर में एफएफआई नॉन रेजिडेंट्स के लिए आज के दिन में 15% है, उस सबको हमको पूरे को एग्जामिन हम कर रहे हैं। वो इमीडिएटली नहीं होगा, उसमें समय लगेगा। ये जो है बहुत डीपर क्वेश्चंस हैं जिनको क्रिकेट की एनालॉजी में जो है 2020 मैच की तरह से नहीं देखना चाहिए। तो वो हम उसको पूरा सोच समझ करके ही क्या हमारे अर्थव्यवस्था के लिए क्या उचित है उसको ध्यान में रखते हुए, क्योंकि बैंक्स में देखिए एक आम साधारण आदमी ट्रस्ट करता है बैंक के ऊपर में, जैसा मैंने एक जगह पे इंटरव्यू में कहा, ही ट्रस्ट्स हिज मनी विद द बैंक्स, तो उस प्रकार का ट्रस्ट वर्दी आदमी, ओनर और मैनेजर बैंक में होना जरूरी है। उसके लिए हम किस प्रकार की एलिजिबिलिटी क्राइटेरिया रखें, किस प्रकार की कंडीशंस रखें, उसके लिए सबसे बात करके और उसको निश्चित रूप से हमारी इकोनॉमी ग्रो कर रही है, अर्थव्यवस्था हमारी बढ़ रही है, तो उसमें हमें और अधिक बैंक्स की आवश्यकता है और उसको ध्यान में रखते हुए जो भी उसमें यदि कोई बदलाव की आवश्यकता होगी तो उसमें बदलाव किए जाएंगे।
धन्यवाद सर। Now I'll request Ms. Sangeeta Mehta from Economic Times to ask her question.
Most of my monetary policy questions are taken away. So I'm going back to the annual report, which was very insightful. It had a lot of data points also. There's one question on the one thing about the annual report where you have said that in FY 25-26, RBI would be considering differentiated regulatory framework for type 1 NBFCs, which are without public funds and non-customer facing NBFCs.
See, it is our policy to have, to as far as possible customize the rules basis the risk profile. And so it is only, in continuation of that particular policy that we have, that mention has been made in the annual report. I'll request DG in case, he would like to add something more on this.
No, I think review is done as a regular process, and type 1 is one which doesn't face outside to the system. So we are having a look at the regulation. So that is an ongoing process. We are doing that. That's it.
There would be kind of new guidelines coming for this kind of NBFCs on fundraising. I mean.
No, type 1 typically doesn't have outside liability.
Yeah. So is there any
new? It will
new?
be depending purely on the internal resource accruals from that.
Yeah, no, are there new guidelines coming for this type 1 type of NBFCs? That is
We'll
what I
review and then see what kind of regulations.
It only means a review will be carried out.
Okay.
If at all there is a need, then we will do it.
Okay.
So that's the third part of our regulation making framework that we announced. Let me, I mentioned about two important elements for those, because I answered that in Hindi. I think it is important for everyone to know and understand that we have issued a regulation making framework now. There are three critical elements in it. One, that we will do a public consultation. And when I mean a public consultation, it is not only in letter, let me assure everyone, it's not only in letter, it is also in intent. So, so that, the important stakeholders, their views, we get all important stakeholders. The second thing is that we will also do an impact to the extent possible. It may be qualitative. Every time, it may not be possible to do a quantitative impact analysis. What will be the impact thereof on the banking system, on the regulated entities, on the customers, on, all the stakeholders. That is the second element. And the third element is that we will regularly review our regulations, directions, etc. because it is dynamic. Policies have to, change with the times. And so it is only, in that context that we are going to review some of these policies related to type 1 NBFCs.
Thank you, sir. Now it will be Mr. Anup from Bloomberg.
Thank you, sir. Sir, Anup here from Bloomberg. Interesting choice of words. Monetary policy is left with very little space to support growth. Does it mean that you would expect fiscal authorities to support rest of the growth and your growth aspirations that India should have? And also, even after all these measures that banks ever
I believe in doing my work, right?
Right, sir.
And we have done, that bit. And obviously it is expected that, everyone else will be doing, their bit. So that is not something for me to say, right? It's not appropriate. I believe in doing my job, and that's what, we will continue to do.
Right, sir. Sir, one more question. If despite everything that you have done for banks, they have ever asked for banks really do not do the transmission, can you take actions? Or what kind of actions can you take?
See, it is ultimately, we have said this in our policy statement also, that monetary policy is a necessary but not a sufficient condition, right? So for monetary policy transmission to happen, there are so many other things, including demand, which has to be there, and so it will depend on the macroeconomic conditions and the demand and the appetite and the demand for credit. Only then, it is the market forces ultimately. See, we have to leave it to market forces. We cannot start regulating that, no, you give credit or you reduce rates. No, you can't do that. It's the market. We believe that our markets are deep, credit markets. There are so many banks, there are so many NBFCs, there are alternative investment funds, now vying, for credit. There is private credit. And so the market forces will certainly, be able to push prices basis demand for credit.
Thank you, sir. Hamsani from Moneycontrol.
Thank you. Hi, I'm Hamsani from Moneycontrol. My question is with regard to the health of the banking system as such, sir. You mentioned in your speech earlier today that you're convinced, you remain quite confident about the health of the banking system. But there's one of the private sector banks where the auditors have recently qualified certain developments as likely to be fraud. Has that been escalated to RBI? What sort of actions you are planning to take on that? And it's been about 4 months since we saw RBI issue a statement in favor of the bank saying that deposits are healthy. What is your assessment of the picture right now, sir?
Well, normally, see, we do not comment on individual banks. As I said, system as a whole, banking system is very, very robust. And I also mentioned, that these events or episodes, I would call them, these will happen. They should not bother us too much, as long as they are far and few between and limited. I think the bank has taken enough number of steps to put their to improve their accounting and other practices, and on the whole, I think the bank is, doing well. I will request DG, Mr. Swaminathan, if he would like to give more details to the extent.
Sir, thank you. I think you've summed up in terms of what is the current situation as far as this particular entity is concerned. You would recall that in the last MPC presser as well, we had said 2-3 things that all of them have been sort of complied with at this point in time. Number one was our priority to have that accounting done properly, accounting for all the discrepancies duly supported by both internal and external audit, and it must be accounted for in Q4 itself. So that has been accomplished by the bank already. Second, we said that forensic audit and accountability must be held so that people are held accountable, and the examination of fraud has to be completed, and law enforcement should take over from there. So that has been accomplished already. And third, of course, our priority is always to ensure that no customer is put to any loss or any inconvenience. That is something which has been ensured, and there is no systemic impact arising out of these kind of episodes. And fourth, we had also said that each of these crises gives us some lessons, so we sharpen our supervisory tools and we calibrate our supervisory approach basis the lessons that we learned from this. So we are going forward, we will look for these kind of red flags so that we are in a position to anticipate them much in advance. So at last, in terms of succession planning, anyway, all of you know that the board and management has been sharing with you the updates. So as Governor said, whatever that was supposed to play out over the last 3 months has been is more or less on track, and I'm sure that it should be, if not immediately, but at least very soon, it should settle down and then be back to normal. And we will keep monitoring this. Not only this, but the system as a whole.
Thank you, sir. If I can be allowed to ask one question. On the deposits front, a large part of transmission would be dependent on what banks decide
you are
on.
taking away someone else's time, huh? So, hold on, if your question is not taken up by someone else, then we can come back.
Thank you.
Thank you, sirs. Next, we'll have Gopika from Mint.
Thank you, sir. Good afternoon, Governor. You have lowered your FY26 inflation forecast to 3.7%. What would be your FY27 inflation forecast? Did you mention
6.5%. Sorry, 4.5%.
Right. So you're expecting it to go beyond 4%.
Yes.
And also on CRR, you're expecting it to be staggered from September till November.
Yes.
What if the global situation, I know you are giving a clear indication to the banks, but what if globally the environment changes, inflation shoots up? I mean, if there's some risk, how would you sort of then ensure that the CRR is...
We have enough tools. See, CRR is not the only tool for monetary policy or liquidity. You have the OMOs, you have the swaps, and you have, the VRRs and the VRRs. So if liquidity has to be managed, which we actually do not, today feel that there would be a need to reverse any of those things, we have sufficient tools to do it.
Hamsini's question on the private sector lender, how will RBI ensure accountability from the board? So far we've not seen any action at that level, but don't you think the board is also responsible for what has happened?
See, individual, so you are talking about the IndusInd Bank, etc. I think, see, the MD CEO, has resigned, and it says, for taking, moral responsibilities. So I thought, that should be good enough. Do you expect that all the board members? I mean, what are you hinting at? I think the MD CEO, who's also a member of the board, if he has taken responsibility, that is at the board level itself.
So, sorry for interruption. Just even SEBI has now issued an interim order saying that there is some kind of insider trading which might have happened, and where the notices have been issued. Bank is claiming that fraud has happened to them. So I want to understand, sir, have they reached out to you particularly, because they mentioned in the call that they will reach out to regulator or the investigative agencies due to the fraud scenario. So, I mean, this is something which is related to one bank, but it is the system of trust.
There are other criminal acts that have happened, and the law will take its course. Please be assured. And in case RBI has to step in and take any action, then RBI will not be failing in its duty. Let's leave it at that. Huh? Let's leave it at that.
Thank you, sir. No, please, sorry, because there are others.
Let's not be, there are other people. You have already, asked your question.
Thank you, sir.
And let's not, preempt. Let's not preempt, and let's not be speculative about it.
Right. Thank you so very much, sir. Next, we'll have Mr. Piyush from Hindu Business Line.
Good afternoon, Governor, DGs. Thanks, Puniji. Sir, on unsecured loans, you said personal loans, the stress has come down a little bit, but MFI stress continue to, be present. So, are you looking at taking any other measures to address this? Sir, there have been, couple of a payment bank had applied for a SFB license around more than 18 months ago. Then 2 SFBs have now applied for universal license. Is there any timeline, sir, as to, in all the other things, RBI has a timeline of approval. So, is there any timeline where you will, give the approval? And sir, just one clarity, this time you did not issue any statement on developmental and regulatory
3 questions you are asking me.
This is a clarification, sir. We didn't see this time.
Clarification, what do I clarify if it is not there? But I'll only say this. that we believe in actions. We don't believe only in making statements. There are already, enough work that, we have on our hands. And so, we will first, we will try to, because a lot of drafts, you are aware, a lot of drafts are like gold loans you mentioned, and there are others. Thank God you are not asking me about those. You are not asking me about those, what about those drafts? You are asking me, to give more and more and more. So we will rather, be trying to therefore consolidate, whatever we have already put in the pipeline, what we have already, we have promised. And so we don't have to necessarily, speak if there is nothing to be spoken, right? What are your other questions? Banks licenses, see, I don't think there is a timeline, but it does not mean that, we don't have an internal timeline. Let me assure you that work is in progress in all those applications that you have mentioned, and very soon you will find our decisions. We have already articulated a decision on one of them, which we have rejected. One of them is already rejected. If you are not aware, then, let me mention, it's already there. And the others also we will quickly.
Sorry, sir, what was which application was rejected?
It's not.
It will be coming out.
It will be coming out in,
as a press release.
As a press release, it will be coming out. You will know.
Today it will come out?
Can't promise, but we will try.
We'll do it shortly.
MFI, sir, will you take any more measures? Thank you.
There are no specific regulatory measures planned for MFIs. There are none. There is something else, related to MFIs, but that is not, for this particular purpose. On the supervisory side, if you would like to add anything, on the MFI, because they have been actually recalibrating their business. We have been engaging with them, through supervision. And so, if you would like to add, on the MFI portfolio, that will, I think.
Yeah, thank you, sir. But I think that has been already articulated in the MPC statement in itself, that the entities that are predominantly in this particular segment have already identified, recalibrated their business models, stepping up upon their collection methodologies, and you've also seen a shrinkage of that portfolio on account of that because of their recalibration. So maybe over a period of time, maybe over the next couple of quarters, this should stabilize. Like the other two segments also, we saw outlier growth, we took some steps and then it moderated. So this also should going forward, but it also depend on the overall economic conditions, income level, because MFI book is to the most vulnerable segment. So that's something which we will have to bear in mind, give it a little more time for normalizing. But we'll keep watching those numbers. But as Governor said, on none of these segments, there are any regulatory actions or measures that is warranted at this point in time.
Thank you, sir. Sir, with your permission, last three questions.
Yes.
Thank you, sir. Next, I'll have Mr. Ashish Agashe from PTI.
Thank you so much, sir. Sir, this is a follow-up to Piyush's question on the unsecured lending bit. So, given that, okay, there's an explicit intent to push credit growth, so should we expect some bit of going back on the risk weights order as well of November 23? And so secondly...
Whatever had to be done has been done on that account. Whatever was there, see, prior to COVID, whatever were the risk weights, some relaxations were given during COVID, which were withdrawn, and that's all. If there is any tightening which has happened, that has also been withdrawn. So there is no more, thing on the risk weights.
And so following the Supreme Court pronouncement on the crypto matter, has there been some conversation regarding, like the RBI stance has been clear from the past itself, but given that...
There is no new development insofar as crypto is concerned. There is a committee in the government, which is looking after this. Of course, you are aware we are concerned about crypto in case, because that can hamper, financial stability and monetary policy, etc.
Thanks.
Thank you, sir. Doordarshan se Shama, you may please ask your question.
Namaskar, sir. So your docu-series are out and they are good. I want to know that generally RBI is known as conservative. So this idea of telling your own story, how did it come from?
I think I'll have to ask, those people, who were involved in, so maybe DG Ravi Shankar, you can throw more light on how this idea came.
Yeah, this came in the context of the RBI at 90 events that we held. As we continued holding those events, and we also held events for international, policymakers, other central banks and all that. So the feedback we got in the process of doing that was that there is a lot of scope for Reserve Bank to convey, particularly to the general public, about its functions. General public has an idea of currency, of prices and monetary policy, but we wanted to expose RBI's workings more to the general public, and in that context we thought of this docu-series. The idea of this docu-series is to show what RBI does in a language and visually that an average person understands. Thank you.
So only one episode is out yet. So how many total episodes are there? And
there are 5 episodes. They'll come one after the other.
Okay.
Thank you, sirs. Lastly, we'll have Mr. Hitesh from Indian Express.
Good afternoon, sir. Sir, in your annual report, you mentioned that one of the agenda for you would be studying monetary policy transmission. As part of it, you will be revisiting optimal level of system liquidity. So, what is that liquidity level which you are looking so that transmission is effective?
So the study will look into those aspects. That's why it's there. I mean, if I knew the answer, then it would not be there in the report. The study will, go into those details as to how the liquidity should be maintained, so as to be able to transfer or translate monetary policy into the money markets and then to the credit markets.
Thank you, sir.
Mr. Governor, my question's not been asked. Therefore, if I can be allowed to ask my question.
How many are left?
I haven't had an opportunity.
Only
so just one question.
Okay, so there are 3 actually.
3. Okay, we take last 3.
Okay, Hamsini, you can.
Thank you. With respect to transmission, much of transmission will depend on how banks look at their deposit rates. And where we are today, we've not seen much of a correction on the deposits front. Banks continue to keep deposit rates higher, and because the fight for deposits is still clearly there in the system. So how do you expect this particular aspect to pan out, sir? And what sort of transmission do you expect to happen on the deposit side? How soon you expect that to happen for the lending rates also to recalibrate?
I think this question was already asked and I already answered it also. But I'll still repeat it. See, 27 against 25 basis points cut that we did in February, there is a lag, you are aware. It will not happen overnight. On the asset side, about 45% of our loan book is linked to external benchmarks, which gets immediately transferred. But on the deposit side, there is no such mechanism. Despite that, and so there is a lag. So we need to understand, as I already mentioned, that there is a lag. Despite that, 27 basis points, it has already, transferred on the deposit side against 25 basis points. Ultimately, you see, the other thing I mentioned is, certainly, this will have an impact. It will be with a lag. It will happen. This is what we have seen over the past 2 cycles of both, tightening and easing, that it happens. It happens with a lag of 6 to 9 months. And it will happen, even this time around.
Thank you.
Thank you, sir. I'll request Mr. Laltendu Mishra from the Hindu. Sorry, you want
If I may, sir, since you had asked earlier to...
There are 2 more questions.
Oh, I'm so sorry.
Mr. Laltendu, you may please ask your question.
Good afternoon, sir. Sir, we fought a war with Pakistan last month. There is a ceasefire right now. Was there an impact on the economy during this period or after that? Because now both sides have also hardened stance. We are going around the world telling our point of views. And secondly, about COVID, there is some rise in COVID cases. Is there a matter of concern there, sir? Thank you.
COVID is not a matter of concern as of now. I think it has become one of the viruses. Hopefully, it should stay like that. The conflict that we had was, or a skirmish or whatever, you may call it, that had a very, very limited, negligible impact on economic activity. Yes, it did have some impact for those days, especially, in northern India, airports being closed, air passenger traffic, did certainly, decrease. But there was no major supply chain disruption, etc. So it does not have any impact, on economic activity, growth, inflation. A few days, the prices in those regions, those sectors had gone up, but it's all normalized. It does not have any meaningful, any major impact on the economy.
Thank you, sir. And lastly, Mr. Aryan from the Informist.
Thank you, sir. This is Aryan from Informist. This question actually is for the Governor as well as for DG Shankar and Gupta. The steeper yield curve has shown to deter rate cut transmission to corporates in the past.
What has deterred?
A steeper yield curve, sir. Now, today's the MPC actions today and the RBI's actions today have steepened this yield curve further. So, are there any steps to curb this? And then secondly, in terms of the liquidity management framework, there have been some discussions in the market. Any timeline on a draft for that coming up, sir? Thank you.
See, liquidity management framework, there is no timeline that we have, but of course we would like to do it as early as possible. These are intricate matters which need to be understood in detail, because actually in our country the money market is not kind of unified. There are 3 different markets. The participants are different, collateral and non-collateral. So from a transmission perspective, therefore, we need to understand these issues deeper. We have been examining this issue, and I cannot give you a time frame really on this. First, on the yield curves, I'll request, and you can also supplement, on the liquidity management framework.
Yeah, as you know, government securities yields are affected by a lot of factors. One of those factors is monetary policy and expectations of monetary policy. And liquidity is another factor, but there are also, it depends on demand in particular sectors and so on. Typically, what you would see is that in response to monetary policy, the short end adjusts quicker than the long end. Therefore, when rates are being cut, the curve tends to steepen. When rates are being raised, the curve tends to flatten. That happens. But the market, over a period of time, these get adjusted. So like we said, we don't target any particular rates in Forex. Similarly, in government securities yields also, there are no rates. Market will find its own level. If market feels it is too steep, compared to what it should be, they would adjust that. So we would leave it to the market for such adjustments. On the liquidity, I think, what the Governor said, we are looking at that. Once internal examination is over, we will come out with that framework. Thank you.
Thank you so much.
Thank you, sir. With this, we come to the close of this press conference. I'll thank the top management of Reserve Bank for answering all the questions and making it quite interactive. I thank you all for being here, and I wish you all a pleasant day.
Thank you.